It's wild to think how quickly things change online. I mean, not that long ago, the internet, as we knew it, was the big new thing. And now, well, everyone's talking about Web3.
Yeah.
It feels like trying to learn a whole new language, at lightning speed.
It can certainly feel that way, yeah.
Well,
And that's exactly why we're doing this deep dive today. Think of this as your kind of express ticket to understanding Web3 and blockchain tech.
okay.
Without getting totally bogged down in like endless jargon. We've sifted through a pile of information, so hopefully you don't have to.
Absolutely. And we've got some really fascinating stuff lined up. We'll be looking at a recent market analysis. It's predicting some pretty significant growth. And there's a blog post digging into the world of Web3 gaming and those things called NFTs.
Right, NFTs, yeah, big topic.
And also a big international survey that gives us a snapshot of like who's using Web3 around the globe right now.
Exactly. And our goal is pretty simple, really. Just to give you a clear picture of what Web3 is all about now, what's making it grow, who's actually using it, and what some of the bumps in the road are ahead.
All tailored for you, the listener.
Yeah, all tailored for you, the curious mind.
Okay, let's unpack this then. First up is this market analysis, and honestly, the numbers are genuinely eye-opening. They're projecting the global market for Web3 and blockchain to, like, skyrocket. From around $5.6 billion in 2024 to over $109 billion by 2032. That's like a 45% growth rate every single year.
It's huge. And what's really key to grasp here isn't just the size of that number, but, what it represents. This kind of explosive growth is just a fundamental shift, really, in how we interact with the digital world.
Right.
It's not just a small upgrade. It's potentially creating entirely new industries, new ways of doing things. And the report points to a few major factors fueling this. First, there's this huge increase in demand for decentralized applications.
Okay, apps, right.
dApps, yeah. Think of them as apps that don't rely on just one company. Plus demand for digital assets and, crucially, better data security.
Well, data security is a no-brainer, isn't it? With hacks and breaches seemingly happening like all the time, the idea of more secure systems, that definitely has strong appeal.
Exactly. And that leads us straight to the second big driver.
Yeah.
The core technology behind so much of Web3, which is blockchain.
Right. The underlying tech.
Yeah. Blockchain allows for creating systems that are transparent, so everyone can see what's happening. Immutable, meaning records can't be easily changed, and trustless.
Trustless.
Meaning,
Great.
Meaning they can operate without needing, say, a bank or some central authority to verify everything. And this has massive implications for all sorts of industries. Finance, supply chain tracking, gaming, even healthcare records.
So it's way bigger than just cryptocurrencies then. It sounds like the underlying tech, the blockchain itself, is the real powerhouse here.
Precisely. I mean, cryptocurrencies are one application, a big one, sure, but the technology itself is much broader. And that's really where Web3 comes in.
Okay.
It's envisioned as the next evolution of the internet, built on these decentralized technologies and promising to give users more ownership and control over their data and their online experiences.
Right. Like imagine not just using social media platforms, but actually owning a piece of them somehow.
That's a central idea, yeah.
Yeah.
User ownership, we hear that term a lot. It's about individuals having more control compared to, the big tech companies running things now.
Makes sense.
And the report also highlights how things like cryptocurrencies, those digital tokens, as well as NFTs, which we'll definitely get into more detail on later, as something called smart contracts, are really driving innovation and investment in this whole space.
Smart contracts. Those are the automated agreements, right? Like code.
Exactly. Automated agreements written in code. They execute themselves when certain conditions are met, all without needing a middleman. They're really the fundamental tools that allow these decentralized systems to work and, create new possibilities.
The report even gave a specific example. A company, WeBank Technology Services, they're launching a value exchange system in Hong Kong that's planned for April 2025, specifically to boost the Web3 scene there. That shows real confidence, real investment, doesn't it?
It really does. It shows they're building the actual infrastructure needed to support this growth. Now, let's maybe shift our focus slightly. Another key trend the market analysis pointed to is the increasing importance of blockchain in cybersecurity.
Okay, this sounds really interesting. How can a shared distributed ledger help keep our online world more secure? I mean, intuitively, sharing sounds less secure, but...
Well, it's interesting, right? Blockchain's very nature offers some inherent security advantages. Because it's decentralized, there isn't one single point that hackers can target like a central server.
Ah, okay, so it's spread out.
Exactly. And the way data is recorded in blocks linked together with cryptography makes it incredibly difficult to tamper with past records. It can also be used to create more secure digital identities. Think of it as a more robust, more transparent way of proving who you are online.
So it's like making it much, much harder for bad actors to sneak in and maybe change things without anyone noticing.
That's the idea. And you can also use smart contracts to automate security protocols, which reduces the reliance on manual checks and minimizes the risk of, human error.
That makes sense.
And the launch of that Center for Cybersecurity, Trust, and Reliability CISTAR at IIT Madras in India last October, that really highlights this growing focus. Their research explicitly includes blockchain security, tying directly into this broader Web3 evolution.
It sounds like security is becoming a really hot area for innovation within Web3. Now, the report also mentioned the growing demand for transactions that are both decentralized and secure. That feels pretty fundamental to the whole idea.
It absolutely is. This is a major engine driving the market forward. I mean, as individuals and businesses increasingly want more control over their digital assets and sensitive information, blockchain offers this framework where transactions can happen directly between parties.
Peer-to-peer.
Peer-to-peer, exactly.
Right.
Without needing traditional intermediaries like banks. It's built on cryptographic trust, not institutional trust.
So we're talking about things like sending money to someone or maybe managing important documents directly without having to go through some central organization.
Precisely. And this can enhance privacy, it can reduce the chances of fraud, and it creates a clear, unchangeable record of transactions, which is incredibly valuable in sectors like, finance, obviously, but also healthcare records, tracking goods through supply chains.
Right. The report mentioned a company called Finality International. What's their perspective on this?
Yeah, so their CEO, Michelle Neal, noted just recently, April 2025, that major banks are becoming, increasingly open to using blockchain for global payments.
Really? The big banks?
Yep. The benefits are becoming hard to ignore. These systems can operate 24/7, payments can settle almost instantly, and there are significant potential cost savings involved compared to the old systems.
That round-the-clock availability, that's huge in today's global economy, isn't it? No more waiting for banks to open in another time zone just to process a payment.
Exactly. And Finality themselves, they launched a payment system in British pounds using blockchain back in December 2023. And they have plans for a similar system for U.S. dollar payments in the U.S. So this really shows how established financial players are starting to seriously adopt this technology. It's not just startups anymore.
Okay, now let's switch gears a bit and talk about something that's been generating a lot of excitement, maybe some confusion too. NFTs, non-fungible tokens, and how they're shaking up the gaming world. We got some insights on this from a blog post by Immutable.
Yes, Immutable. And what's truly fascinating here is how Web3 gaming is providing a really compelling reason for everyday people to understand and actually use NFTs. The core concept is that in these Web3 games, players can truly own their digital in-game items as NFTs.
Own them. Like really own that super rare helmet I spent like weeks grinding for in a game, not just have it tied to my game account that could disappear.
Exactly that. These digital items, whether it's unique character outfits, powerful weapons, virtual land, even the characters themselves, they're recorded permanently on the blockchain.
Wow.
They're not just bits of data stored on the game company's servers that they ultimately control. And because they're NFTs, players have the freedom to trade them, sell them on open digital marketplaces.
That's a massive shift in control, isn't it? I remember hearing stories, I think it was World of Warcraft in China, where players suddenly lost access to all their hard-earned items when the game's operation changed hands or shut down. That kind of thing wouldn't happen with NFTs.
That's one of the key advantages proponents talk about. With NFTs, your ownership is designed to be secure and transparent, verified by smart contracts on the blockchain. You have true digital ownership, which means you can sell it, keep it, or potentially even use that asset in other games or digital environments that might support it in the future.
So beyond just having something cool to show off in the game, there's actual economic potential for players here, like real money.
Absolutely. This has led to the rise of what's called GameFi, or play-to-earn models. These are basically innovative economic systems built into games where players can earn tangible financial rewards, sometimes even, real money through their skills and the time they invest. Axie Infinity was a really prominent early example where, at its peak, some players in developing countries were reportedly earning more than their local minimum wage just by playing the game.
That's incredible, just from playing a game. And
Mhm.
the blog post mentioned that NFTs have uses beyond just in-game items too, right? It's
Yeah,
not
right.
just about virtual swords.
That's a really crucial point.
Yeah.
While, NFTs in the art world sometimes get simplified down to just being expensive digital images, their underlying potential is much broader. They can act as digital identity cards, proof of ownership for physical items, tickets to exclusive events, access keys to online communities.
Okay, like a digital membership card almost.
Sort of, yeah. The NFL's NFL All-Day NFT collection is a great example. A major organization using NFTs to connect with fans in new ways, create collectible experiences, and yes, open up new revenue streams.
So you could imagine that rare weapon NFT not only showing off your skill in one game, but maybe also getting you access to a special online tournament or even a real-world gaming convention. That's a whole new level of connection.
Exactly. Bridging the digital and physical.
Hmm.
And platforms like the Immutable Marketplace and tools they offer like Immutable Passport are trying to make it easier for players to manage and trade these NFTs across different Web3 games within their ecosystem, trying to break down those traditional walled gardens of gaming.
It really sounds like NFTs are potentially set to revolutionize how we think about digital ownership and value, especially in gaming. But like any fast-moving tech, there are always challenges, right? The market analysis mentioned regulatory uncertainty as a pretty significant hurdle.
Yeah, this is a really important issue, a big one. The lack of clear and consistent legal frameworks across different countries, different jurisdictions, it creates a lot of headaches for businesses and investors.
How so?
Well, companies can struggle to navigate all these different rules, which can definitely slow down innovation and adoption, especially across borders.
Yeah.
And the worry about sudden changes in regulations or even outright bans, particularly concerning cryptocurrencies and decentralized finance, or DeFi, that can make people pretty hesitant to invest long term.
Yeah, it's like trying to build a house without knowing if the ground beneath you is stable or if the rules about foundations are going to change tomorrow. Without clear rules, it's just hard to plan and invest. Precisely. And a Forbes article we looked at echoed this point. It also pointed out that the technical jargon and often clunky user experience of Web3 can be another major barrier.
Oh, yeah.
Terms like wallet addresses, which are kind of like bank account numbers for crypto, or multi-sig security, DeFi itself, it can feel really overwhelming to newcomers.
Yeah, it can feel like you need a degree in computer science just to figure out the basics sometimes. It's not exactly plug and play yet.
Not always, no. And to overcome this, we really need much more intuitive, user-friendly interfaces. Interfaces that present these tools and services in a way that doesn't require deep technical expertise. Using everyday language people can actually grasp. Meeting people where they are is just absolutely crucial for broader adoption.
Totally. It's all about making it accessible to the average internet user, not just the early tech adopters or the crypto-savvy crowd.
Okay.
Now let's turn our attention to that international survey from the Coinbase Institute. It gives us a really interesting look at how aware people are of Web3 around the world and how much they're actually using it. All right, this survey is pretty useful. It gathered responses from over 32,000 internet users across 16 different countries back in October 2022. So it's a snapshot from that time. But its goal was to track how familiar people are with Web3, how much they're using it, and importantly, allow us to compare different countries. It gives us that valuable global perspective.
Okay, and what were some of the key takeaways in terms of just general awareness? Did people know what this stuff is?
Well, one interesting finding was that generally more people were aware of cryptocurrencies compared to the underlying blockchain technology itself.
That makes sense.
Yeah, it probably is because cryptocurrencies like Bitcoin, Ethereum, they've received way more media attention, especially, when their prices have those wild swings. The survey noted that Google search data at the time showed cryptocurrency was being searched about twice as often as blockchain.
Right, the price movements grab headlines much more than the technical infrastructure underneath.
Yeah.
And how did awareness levels vary between different countries? Was it pretty even?
Not really. Developed economies generally showed higher levels of familiarity with cryptocurrencies. Countries like Italy, Canada, Australia had over 90% of respondents saying they heard of crypto in some form.
Wow, okay.
On the other hand, some emerging economies like Thailand, India, Vietnam had lower overall awareness reported. But interestingly, Japan stood out. Its developed economy, but had surprisingly lower levels of awareness compared to its peers.
Huh, Japan. That is surprising. Any thoughts from the survey on why awareness might be higher in certain places? Like, I think you mentioned the Philippines?
Yeah, the survey authors suggested a few possible reasons for the high awareness noted in the Philippines. One factor could simply be a young and very digitally savvy population.
Okay.
Another significant aspect is the huge volume of cash remittances sent into the country, which naturally creates a demand for faster, cheaper, more efficient ways to transfer money internationally.
Ah, so crypto might be seen as a solution there.
Potentially, yeah. And additionally, the presence of regulations that were seen as supportive of digital asset exchanges might have created a more secure and accessible environment for people to actually engage with cryptocurrencies.
So it seems like practical needs like remittances and a supportive regulatory environment can really boost awareness and maybe even early adoption. What about awareness of specific Web3 applications beyond just crypto, like NFTs or DeFi?
The survey found that crypto payments and NFTs were the most widely recognized applications. Again, likely due to some mainstream companies starting to explore crypto for payments and all the high-profile media attention around digital art NFTs, especially back then.
Right.
Applications like staking, which is kind of like earning interest on your crypto holdings by helping secure the network, and the broader concept of decentralized finance, DeFi, were generally less well known.
Okay. And were there differences in how much people knew about these specific uses between, say, developed and emerging markets?
Yes, there were some noticeable differences there too. Understanding how to use crypto for payments was reported more commonly in developed markets, whereas knowledge of crypto games and the metaverse, those immersive virtual worlds, was higher in emerging markets.
Interesting. Why the game's focus?
Well, it could be linked back to the popularity of those play-to-earn games like Axie Infinity, particularly in Southeast Asia. And that's supported by organizations like the Asia Blockchain Gaming Alliance, which are active in the region.
It really sounds like gaming is acting as a major entry point into the whole Web3 world for many people in emerging economies. What about where people are actually getting their information about all this? Is it traditional news?
Not primarily, according to the survey. It indicated that modern digital media are the main sources. So platforms like YouTube, Google searches, websites specifically focused on cryptocurrencies, and social media.
Makes sense.
Traditional news outlets and academic sources were less commonly cited, which kind of fits given the inherently digital nature of the technology itself. Right.
Yeah, people are learning about Web3 in the same online spaces where Web3 itself is evolving. Makes perfect sense. Okay, so now the big question. Who is actually using Web3 services beyond just being aware of them?
Well, the survey revealed generally higher rates of past usage in emerging markets compared to developed ones.
Higher usage in emerging markets, why might that be?
It could be driven by some of the factors we've touched on, like remittances being easier or cheaper via crypto, but also potentially as a way to hedge against high inflation or instability in their local currencies. It offers an alternative.
Right, a potential store of value or way to transact outside the traditional system.
Exactly. For example, Thailand showed a high level of overall past usage reported in the survey, while France reported lower rates. And interestingly, a pretty significant portion of crypto users, around 40% in this survey, reported using more than one Web3 service.
Oh, okay, so they don't just stick to one thing.
Apparently not always. It suggests that once people take that first step, maybe buying some crypto, they tend to explore other related services, which leads to these natural clusters of use, like people involved in payments might also get into trading, or people interested in NFTs might naturally gravitate towards crypto gaming.
So once people take that initial step, they're more likely to explore other interconnected parts of the Web3 world. What about how people typically get started with Web3? What's the most common first experience or entry point?
The survey data suggested that trading on centralized cryptocurrency exchanges, think platforms like Coinbase, Binance, Kraken, is the most common first step into Web3. That accounted for about 21% of respondents who had used Web3.
Okay.
And that makes sense, right? These exchanges provide a relatively straightforward way to buy and sell cryptocurrencies using traditional currencies like dollars or euros. It's the main on-ramp for many.
Yeah, that's the practical first step for most people actually getting some crypto in the first place. Now, looking ahead, what did the survey say about people's intentions for using Web3 in the future?
Generally, the survey found a positive link between current use and future intentions. People using it now plan to continue. But it also indicated an expected increase in the adoption of crypto for making payments over the next 3 years.
Payments again.
Yeah, with the potential for payments to become the most popular Web3 service overall. This could be driven by anticipated improvements in the usability, the speed of crypto payments,
Yeah.
maybe lower fees, and also addressing some of those current concerns about volatility and maybe privacy.
That would be a really big shift if using crypto to pay for everyday things actually takes off widely.
Yeah.
And are there differences in these future intentions across different regions, emerging versus developed?
Absolutely. People in emerging markets were significantly more inclined, according to the survey, to adopt crypto in the next 3 years.
Why the big difference?
Again, potentially due to factors like larger unbanked or underbanked populations and maybe higher levels of dissatisfaction with their existing national currencies or financial systems. The Philippines, for example, showed really strong intended future use across various Web3 activities, payments, staking, crypto gaming,
Okay.
and as we've seen, people who are already using Web3 services are highly likely to continue using them. There's a stickiness there once people get involved.
That really suggests that creating a positive, easy initial experience is super important for long-term growth and adoption, doesn't it? Get them in the door and make it worthwhile.
Definitely. First impressions matter, even in Web3. Finally, the survey also looked at the concerns and obstacles. What's preventing more widespread adoption? What are people worried about?
Right. The barriers, what came out on top?
The top concerns that emerged overall were the volatility of cryptocurrency prices, those big ups and downs, and just a general lack of understanding about how Web3 works. It's still confusing for many.
Understandable.
And when you look at the differences between people who currently use crypto and those who don't, the specific concerns vary a bit.
How so?
Current crypto users, they're most worried about those price swings, yeah, but also the risk of platforms or exchanges going bankrupt and the uncertainty surrounding government regulations.
Okay, so market and platform stability and rules.
Exactly. Non-users, on the other hand, their main barriers are more fundamental, simply not knowing enough about Web3, feeling they don't have the funds to invest, or just not knowing where or how to even begin.
So it sounds like education and making it more accessible, maybe financially through smaller entry points, are key to attracting new users, while addressing stability, security, and regulatory issues is crucial for keeping and expanding the existing user base.
That sums it up pretty well. And the Forbes article we mentioned earlier also highlighted that technical jargon and security risks, like major hacks of platforms or protocols, remain significant hurdles too.
Yeah, those big hacks really damage confidence, don't they?
They absolutely do. And looking ahead, the potential impact of global elections on how different governments decide to regulate Web3 is something everyone in this space is watching closely. Projects might increasingly choose to operate or even relocate to countries perceived as having more favorable or clearer rules.
It sounds like while there are definitely some serious challenges to overcome regulation, user experience, security, the overall picture for Web3 is still pretty optimistic, especially maybe with a younger generation that's just grown up digital and ongoing efforts to make it all more user-friendly.
I think that's a great way to summarize it, yeah. Despite the hurdles, you have to remember it's still relatively early days for Web3 adoption. The potential for significant growth, as that market analysis showed, is definitely there.
Okay, so to recap everything we've dived into, we've explored the projected massive growth of the Web3 and blockchain market. We talked about the revolutionary potential of NFTs, especially in gaming. The fundamental importance of decentralization came up again and again. But we also hit on the significant challenges, regulation, user experience, security, and we looked at those diverse levels of global awareness and adoption, noting a particularly strong future outlook, it seems, in emerging economies. Hopefully, this deep dive has given you, our listener, a solid understanding, or at least a better handle on this really rapidly evolving space.
Yeah, a foundation to build on. And with that in mind, maybe something to think about. Which of these big trends, the growth of decentralized finance, maybe the expansion of NFT-powered experiences, or perhaps the slow development of clearer regulations, which one do you think will ultimately be the biggest driver, the biggest catalyst for Web3's widespread adoption in the coming years?
Good question.
And maybe more importantly, what role might you find yourself playing in this evolution, even just as an informed user or observer? We definitely encourage you to explore the aspects of Web3 that maybe piqued your interest today.